Shares of Tesla in the green this morning, continuing its comeback after second quarter deliveries beat analyst estimates earlier this week. Shares are up over 20% for the past 5 days.
We've made a massive amount of progress with Optimus in a short period of time, from someone pretending to be a robot dancing in a suit, to a pretty hodgepodgey robot, to a robot that is actually doing useful tasks in the factory today. And Tesla's obviously way more than a car company. We do a lot of software at Tesla, or a very huge percentage of the engineering we do is actually software engineering. So Tesla's, I'd say, as much a software company as it is a hardware company. This is a very big deal because car companies are not software companies normally. So this matters a lot. So things like our orbiter software for energy storage, all of the software that controls the cars, the megapacks, the power walls, the solar, obviously for AI and full self-driving.
Tesla's stock is up this morning, following its upward trend that began earlier this week when a second quarter delivery above analyst expectations. Over 20% of shares have increased in the last 5 days. With Optimus, we've come a long way in a short time, from someone posing as a robot dancing in a costume to a quite haphazard robot, and now to a robot that is truly performing helpful jobs in the workplace. It's clear that Tesla is much more than just an automaker. Software engineering makes up a very large portion of the engineering work we conduct. In my opinion, Tesla is a software company just as much as it is a hardware firm. Since automakers aren't typically software companies, this is a huge thing. Things like our energy storage auto software, the vehicle control software, megapacks, power walls, and solar are important. For AI and fully autonomous driving, of course. You're using a wise viewpoint if you've only been considering Tesla's automobile manufacturing. But now is the moment to cast a larger net. We explore Tesla's enormous potential beyond cars in this part. Expert Keith Fitzgerald, who keeps a close watch on market developments, offers insights that could alter your perspective on Tesla. Fitzgerald thinks that Tesla's potential is still in its infancy. In the upcoming years, he expects the company to double or possibly quadruple in value, indicating considerable growth. This expansion is rooted not just in their well-known driverless cars, but also in fully autonomous technology and energy solutions, which are yet completely unexplored by Tesla. However, before we go into the specifics, please remember to subscribe to Tesla Stock News and like this video. All right, let's take a closer look. 95% of experts who previously undervalued Tesla now consider it to be a huge misunderstanding to regard the firm as just an automaker. Fitzgerald highlights Tesla's revolutionary potential in fields like artificial intelligence and robotics, arguing that it may be among the most cheap AI stocks available today. This opinion is supported by a comparison of the company's current market value with its potential for the future. Please pay attention as we go along. There's no need to click or purchase anything. We're going to play a video in which Fitzgerald expresses his optimism in Tesla, implying that the company's stock price may reach $300 in the upcoming year. I should also point out that you remain optimistic about Tesla, Keith. Next year, this stock might be worth $300, right? Yes, I am. In the upcoming years, I believe the stock will double, triple, or possibly even increase in value. We are in the early innings once more. Anyone considering this solely in terms of automobiles is highly intelligent, but I would advise them to greatly expand their horizons. This has to do with robotics and power. Love him or hate him, Musk is an expert in his field, and I believe it to be the best underappreciated AI play on the planet at the moment. A slight 20% improvement over its existing position, but his larger perspective is the true lesson. It's about the enormous unrealized potential that might soon cause the stock to double or triple, not just a 20% increase. What makes this important? Because it changes the perception of Tesla from a conventional automaker to a pioneer in robotics and artificial intelligence. Tesla may now have the best investment opportunity in AI as a result of this. Whether you like him or not, Elon Musk's leadership is making Tesla a dominant force in tech innovation overall as well as in the automobile industry. This is about more than simply automobiles. It's about power, automation, and leveraging one of the market's most underappreciated industries. Watch as we examine why Tesla may be the underdog in the AI race, poised to transform not only transportation, but also our daily interactions with technology. In only the last 30 days, Tesla's stock has increased by an incredible 45%, a surge that might unnerve any investor. But as the saying goes, when in doubt, zoom out. Tesla's stock has dropped 6% over the last 12 months, practically returning to its previous level. The market has really corrected, dispelling the concerns and negativity that previously hampered Tesla's prospects. Let's talk about the details now. Numerous market analysts expressed doubt about Tesla's delivery figures, forecasting a decline because of a purported demand issue. The delivery numbers, however, contradicted the bad narrative and exceeded expectations. Furthermore, the excitement around the August 8th robotaxi day is expected to dispel additional doubts, boosting optimism. Crucial is Elon Musk's app. Going forward, the facts contradict the complaints leveled at Tesla for lowering car costs, which some saw as an indication of declining demand. This approach is probably in line with increased market penetration in volume sales, which is a wise move in the very competitive auto industry. Keep checking back as we prepare for Robotaxi Day. The possibilities for advancement in robotics and artificial intelligence are still enormous, and Tesla's journey is far from complete. Don't pass up these advancements. Continue to observe, keep yourself updated, and think about how Tesla's tactics may affect not only the global automobile industry, but also the technology landscape more broadly. Tesla has distinguished itself with its strategic price choices in the face of high borrowing rates that are affecting consumer spending and automakers that are having difficulty selling cars. Tesla's best-in-industry margins allowed it to lower pricing, unlike Ford and GM. This has positioned Tesla as a leader in market strategy and operational efficiency in addition to helping to sustain sales volume. Critics can contend that Elon Musk's decision-making has shifted or that his participation with Tesla has diminished. On the other hand, recent rulings seem to indicate differently. These are the choices made by a leader who is still very aware of the demands of the business and the state of the market. Although individuals involved in trading should exercise prudence, the picture for long-term Tesla stockholders is still favorable. Expectations are extremely high as excitement builds for August 8th, which is predicted to be a momentous day for the introduction of Tesla's robotaxi. This could be a risky period for short-term investors and swing traders. The stock may see a sell-off, the traditional buy the rumor, sell the news situation, if the event doesn't produce anything noteworthy. Therefore, use caution and prudent investment management around this day. Many professionals, on the other hand, take a long-term approach to investing, regularly using dollar-cost averaging without attempting to time the market. It's a more reliable strategy because trying to get rich fast by timing the market is frequently the fastest way to lose money. To be clear, 20% of my portfolio is invested in Tesla, which reflects my optimistic view of the business. In the long run, it is anticipated that the robotics, fully autonomous driving, and energy sectors would greatly surpass Tesla's current market capitalization, possibly adding an additional $3 trillion by the end of the decade. These fields, particularly robotics and FSD, represent unexplored markets with transformative potential. The revolutionary influence could be enormous, but it is difficult to determine the precise magnitude. Tesla and businesses comparable to it are expected to see a similar trajectory if NVIDIA, for example, has demonstrated how profitable it can be to enter new tech areas, with sales and share prices soaring. Although they haven't experienced this degree of growth yet, it is anticipated that they will once these new markets are opened. Based on anticipated future cash flows, a discounted cash flow (DCF) model, a crucial instrument in investment analysis, can be used to estimate a company's prospective financial trajectory. Applying a DCF model to Tesla, especially on the specially created stock MVP platform, indicates that over the next 5 years, revenue growth of roughly 40 to 50% is anticipated. It is predicted that this expansion would happen in a parabolic spike rather than gradually. This pattern is similar to the growth trajectory that was previously seen at NVIDIA, where new technology and market adaptations led to a sharp acceleration after initial modest increases. Strategic developments in three key areas, robotics, fully autonomous driving, and energy solutions, are responsible for Tesla's phenomenal success. In addition to being a major extension of Tesla's business model, each of these industries also has access to larger, quickly growing markets. While developments in FSD technology are poised to revolutionize transportation, robotics, and artificial intelligence, AI, are poised to revolutionize a number of industries, including manufacturing and services. In a similar vein, worldwide trends towards sustainable energy sources are consistent with Tesla's energy endeavors, especially in the areas of battery technology and renewable energy solutions, the market.